Good morning, everyone. Welcome to Primepoint's webinar on the new IRS Form W-4. Thanks for joining us. I'm Victor Siri, VP of Marketing, and I'm joined today by Chris Manzi, our Major Accounts Team Leader, and Scott Schroeder, VP of Technology. Both these fellows have been paying a lot of attention to the details around the new W-4 for the past few months and have a lot of good information for you today. They'll be covering all the content of the webinar itself. But before I turn things over to them, I want to give you some background information. As you most likely know, the IRS created this new Form W-4 to address changes created by the tax law passed by Congress in 2017. When that happened, the IRS made it a little challenging for both Primepoint and our customers because even though the new form and tax tables take effect on January 1st, 2020, the final form and the associated tax tables were not finalized by the IRS until December 5th, just 2 weeks ago. But here at Primepoint, we prepared as much as possible in advance with the preliminary information that was available, which enabled us to finalize most of the changes in our system right away after things were finalized by the IRS, which we were able to do within about 2 weeks. With that final information, we were also able to look at how different situations would turn out for different employees and what kind of results they would get based on the way they completed the form. You'll see today that the form does have a number of complexities, and it became clear to us as we worked through this that it's unlikely a payroll and HR professional can do much more than help individuals to understand the questions on the form. For the most part, the answers to those questions will be very specific to an individual situation. For the unmarried employee without any dependents, things will be pretty straightforward. But for individuals with other sources of additional income and/or spousal income with dependents, the answers to the form's questions start to become a little bit more complicated. And the answers to the questions, it can't really be categorized as right or wrong. And that's because it's so dependent on an individual situation. The best advice that can be given to an employee is to consult their tax advisor. And this is important because if an employee does not take care in completing the form appropriately for their particular situation, it may have a big impact when they file their 2020 tax return and create some surprises that they're not going to be happy with. But these issues should become clearer as you view today's webinar, which will be recorded, and we're going to post it to our website should you want to review all the details again. We'll also email the PowerPoint slides that you're going to see today. We'll email those later today to all those that attended and registered, because we're pretty sure that because there is so much detailed information in this presentation, that you're likely going to want to review the content a few times, and possibly share this information with colleagues who may not have been able to sit on the seminar today. So what I'm going to move on to now is an overview. Yep, there we go. Going to move on to an overview of what we're going to cover in today's webinar. First, we're going to look at the basics of the form, and Chris has done a lot of research and has a lot of information on some of the different aspects of the form and what you should be aware of. We're going to go through an example of completing the new W-4 and show you what that looks like. We're also going to review with you the solutions that Primepoint has put into place. As I mentioned earlier, we've been working for a few months, maybe more, with the preliminary information to create things in our system to make this easier for you and your employees. So you're going to see, and as I said, over the last 2 weeks, we've been able to finalize most of that, and you're going to see today what that looks like and how that works. You're also going to get to see some federal tax calculation examples, which is really the results that we've been able to look at over the past few days since we've gotten all the final tax tables and the final form and final information. And then the last thing we'll hit is some FAQs. Since this form has come out, we've had customers emailing questions and asking us questions via phone. So we have a pretty good idea of what's out there and how people are confused, and hopefully we'll be able to hit a lot of that information at the end when we go through the frequently asked questions. So with that, I'm going to turn things over to Chris, and he's going to start to walk you through all of his information.
Thank you, Vic. Good morning, everyone. I'm going to start with the basics. So you all know that this is effective for January 1st, 2020. The individuals that are going to be completing this new W-4 are going to be all the new hires that are hired on January 1st, 2020 and after. Additionally, anyone who wants to make changes and amend their W-4 based on maybe a change in their tax situation or filing status, etc., they would have to fill out the new W-4. As well as individuals who indicated exempt on the previous W-4 would have to use the new one as well. So there's no mention of much of existing employees because employers are not required to have the new employees fill out this W-4. They can ask, but it's not required. And then overall, the IRS's objective of the new form was to increase the transparency and accuracy of the tax withholding. So let's go over some of the key changes here. The old W-4, was just asking for exemptions. It was just really just filing status and exemptions, whereas now the new W-4 is asking for dependents and focusing on more of the adjustments. So it's considering the employee's tax return holistically, so it's looking at the 1040 income. So it could be the employee's other job that they might have, or a spouse that is also working, anything that would really hit the 1040 there. And then if the employee is maybe claiming, deductions in addition to the standard deduction, it's considering the itemized deductions that the employee would file on their return. So just kind of going over the overview, high level of the W-4. Let's see here. You have step one is the employee just filling out their personal information. This section is required, so just pretty simple: name, address, social, and then their filing status. Step two is saying this is just the multiple job section that it's taking into consideration. So if the employee is working another job and the employee might be filing married jointly, this is considering these options here we'll get into shortly. Sorry. Then the next steps we have here is steps 3 and 4. These are just the dependent section I was talking about earlier, and considering the dependent credit, they'll be able to fill this section out. The IRS is saying, at least you see on the top, that the most accurate is if the person filling this out with the highest paying job would fill out these steps. Step 4, just considering other income that maybe not from their jobs, the non-wage income, the deductions in step B, 4B there, in addition to deductions outside the standard deduction, and step 4C is the extra withholding on a per pay period basis. And then this is the instructions. I don't expect you to read this. This is just pointing out that there's an instructions page on the next that would be after or with it. There is a mention of the employee that would claim exemption if they're claiming to be exempt on the W-4. The step there would just to be writing the word exempt under step 4C. So in this is just a multiple jobs worksheet that's with the W-4. Again, just not expecting you to read this. Just we're going to go through an example of this. There's also another one here for the deductions worksheets. These worksheets are really in mind to help the employee fill out so that they can fill in parts of the steps of the W-4. This is a table used for step 2 if the employee is utilizing the multiple jobs worksheet. So it has the 3 different filing statuses there. So let's kind of go through an example of an employee that's filling out the W-4. So we kind of came up with this scenario of Jane Doe of a salary of $78,000 a year. She's paid bi-weekly, $3,000. Married, filed jointly. She has a second household income of $50,000. She has one child under 17 years old that's a qualified dependent, and one child over 17 years old that's a qualified dependent. Has about $500 annual dividends and interest, and as far as their itemized deductions, she's claiming $34,300, and she contributes to an IRA. At least she's anticipating for 2020 $1,000. So what does that look like on the form? So she fills out in step 1 her name, address, and her social. And then in 1C, she's checking the box for the middle option there, married, filed jointly. Then we get to step 2 here. She's going to be utilizing option B, the multiple jobs worksheet. She could utilize option C, but in this example, we're just going to show option B. So we're going to be continuing now to show you what the multiple jobs worksheet is going to look like for her case. So we know that there's a second job involved, so we're going to be filling out step 1 here. So it says, if you have 2 jobs or you're married, filed jointly, and you and your spouse each have a job, she's going to be utilizing this table of the higher paying job and the lower paying job, and then putting in this value in step 1. So let's see. So on the left here would be the higher wage paying job, which is herself, Jane. So we know that she has the $78,000 per year. So we find that row. And then the spouse has the $50,000. So we find where that intersects, and that value is $6,570. So we come back to the form of this multiple jobs worksheet. She would fill in that number that intersected at $6,570. And then if you go to look at step 3, we know that she's paid $3,000 biweekly, so she'll put 26 for biweekly. That's how many times per year. And then step 4 at the bottom is just taking step 1, the $6,570, and dividing it by 26, and is arriving at $252.69. So from there, now that she filled out this worksheet, she knows step 4. She's going to put step 4's result into step 4C, the extra withholding. That's what the multiple jobs worksheet's instructing her to do. And then we can move on to the other aspects of her profile. We know that Jane has one child that's under 17 years old and one child that's over 17 years old. So she's putting 2,000 times 1 in the claiming dependent section, and then 1 times the 500 for the other child, arriving at a total in step 3 of 2,500. Then we know from her profile that she has the $500 of annual dividends and interest, so that's going to be in step 4A. And then that would be, the next part is the itemized deductions. We know that she has $34,300, so she puts that figure in step 1 on this worksheet to help her figure the total, what to put down in step 4B. So she's following through the worksheet here. Step 2 is just entering in the standard deduction. So in this case, she's married, filed jointly, she's going to put $24,800. She's going to take the difference in step 3 and arrive at $9,500. Then we know that she's going to be, at least she's anticipating to contribute $1,000 to her IRA, so there's $1,000 there in step 4. And then step 5 is just adding 3 and 4, so we get $10,500. and then it's saying to enter this result into step 4B. Now you can see in step 4B that 10,500 is now populated. So at this point, she's done completing the W-4 based on the profile that we've come up with. And now I'm going to be showing you a live demo. This is the W-4 solution we have in place in Employee Experience. Bear with me 1 sec. I'm just going to use a sample person here. All right, so logging in as the example of Kenny Barker. So this is the W-4 and Employee Experience here. So we have it filled in because this is an existing employee. It's pre-filled Kenny Barker's information. It has his address and social security number. So I'm going to go ahead and move forward with filling this out. This W-4 is also going to be used for not only existing employees, but if for clients that have our onboarding solution, they can also utilize this for their new hires. Let's see, so if I pick married, file jointly here. Sorry, not sure why the mouse is kind of acting up. There we go. So we're going to move on to step 2. So we have it a little bit with the different options here. The employee can use option A, the estimator, and we've made the IRS link available here, so I can just kind of show you what that looks like. Right now, the IRS is just saying that right now you can utilize the tax withholding estimator, but just for 2019. They're saying that for 2020 to come back and use it in January. The other option in step 2, if it applies for the employee to fill this out, they can use the multiple jobs worksheet to calculate the 4C extra withholding. So we have that built into the solution here that they can actually click this worksheet here. And then in the case of, like, let's say Jane, we're going to use the 2 jobs. So we know that she's paid biweekly, so I'm going to change it to 26. We know that she's $78,000 a year, and that the other household income was $50,000. And just to point out, the other option there, we have the radio button for 3 jobs if we wanted to go down that road, but we didn't want to get too crazy, if this wasn't crazy enough. So I'm going to go ahead and hit save here, and now if I scroll down, in this 4C section, that actually already pre-populated the amount and did the math for me, so I didn't have to do that. And then moving on, we know that we have the 2 qualified dependents, so I'm going ahead and select this drop down to 1, and it does the math for me 1 times the 2,000 here, and it's also making this step 3 in real time, updating it. And we also have the 1 dependent for the 500. So now my total here in step 3 is 2,500. Moving on to step 4C, step 4. We have the other income of with the dividends and interest. We're going to populate $500 here. Remember, this is an annual figure. The deductions, again, we're expecting to claim deductions other than the standard for Jane. So in this case, we're going to go ahead and use this deductions worksheet that's built in here. So Jane is estimating we have in that profile 34,300 is itemized, and that should be contributing the $1,000 towards the IRA contributions here. So I'm going ahead and hit save. So just in that, similar to last time, it filled in the 10,500 for me. And at this point, I can go ahead and just kind of sign it. And I can also go ahead and download it. This will open up a nice PDF for the employee. They can go ahead and print that for their own copy. If I come back to employee experience, the employee can go ahead and select Save and Complete. And at that point, it'll go in as a pending tax change, as it does normally for the EHR Business Access Administrator, to go ahead and approve it so that it can be updated in their tax profile. I'm now going to go ahead and switch back to the presentation. So let's say the employee now hands you the paper W-4 and doesn't go through the employee experience route. Right now, this new field, you're used to the bottom section of just the filing status and exemptions, but come Friday, December 27th, you're going to be able to see the top attribute where it says W-4 for 2020 or later on file. It's going to default existing employees to no, not on file. So when the administrator goes ahead and selects that drop-down from no to yes, it's going to open up these attributes, the new attributes based on the new W-4. So in the case of, let's say, Jane's W-4, we're putting down as filing status of married. Step 2C is not checked, so the administrator would just leave that as no, is not checked. The dependents, we know is 2,500, the 2,000 from the child under 17, the one that, so this would already be pre-filled from Jane. You're just kind of using the steps that's already filled out from the paper W-4. And then the administrator would just be able to save this and it'd be reflected in their tax profile going forward for their paychecks in 2020. Similarly, I know this is in Business Access. This is going to have the same exact fields in EHR. So now I'm going to pass it on to Scott Schroeder, and he's going to talk about the different tax calculation examples.
Okay, thanks, Chris. So far, we've had a chance to see the form and get an understanding of what's needed in information and also how to complete it. At this point, I'd like to run through some practical examples of real-world situations for employees and compare both the 2019 results versus the 2020 results. What we'll be doing is changing individual parameters. The reason for that is the real goal here, and what we found very valuable internally, is to understand the cause and effect in varying certain parameters and what effect did it have on the end withholding. So we ran through, countless examples to come up with a real feel for the new W-4. So the first example I'm going to use is a takeoff of what Chris has already entered for the Jane Doe example, and that would be, just to refresh real quick, Jane had wages of $78,000 and additional income of $50,000 from a spouse. On the left side of this chart is the old W-4 setup as married with 4 exemptions. On the right side is the new W-4 setup, one option anyway, and that is selecting option 2C, which is 2 similar jobs using the accelerated tax tables. When you do that, there's no need to figure out extra withholding, so that's at 0. And then the dependent income and deduction information is the same as what was entered in her profile from the previous example. So if we look down below each side here, it's comparing the 2019 tables, 21238 versus the 2020 configuration calculation, which is 21235. Obviously, very similar. Now, if we go to the next slide is using the same information, except in step 2, we've selected using the multiple jobs worksheet as opposed to using the two similar jobs accelerated tables checkbox. So the multiple jobs worksheet, Chris went through that example of using the lookup form, and that had extra withholdings of $252.69, other information all being the same. And this time when we look at the results, this came out with a federal tax deduction of $342.12. So yielding on an annualized basis, $3,300 difference in what their tax return would look like. So pretty significant, and the difference really is using a lookup table and a checkbox. Some of the drivers that go into that is there's a significant difference sort of buried in this, and it's subtle terminology. So in 2019 and earlier, the W-4 used exemptions, which you could pretty much put what you like, but in the concept of dependents in 2020, you have under 17-year dependents and over 17 dependents, but spouses aren't dependents. So you're right away having a different calculation due to that. The next example I'd like to go through is, again, we're going to run through a variety of different scenarios, try and touch on the impact of different parameters. But this one, on the left side, their 2019 W-4 would show single 2 with a salary of $1,000 weekly. On the right side, the 2020 W-4 would be $1,000 weekly salary, and all the employee did was specify single and skipped over all the other information, which, by the way, is optional. The only required steps on the W-4 are step 1 and step 5, putting your personal information and then signing it. In this case, and if you don't do one at all, you're going to be single 0 as an assumption. But anyway, the reason we picked the single 2 and compared it to single 0 is because you'll notice the tax result, 8805, is exactly the same. And that isn't by accident. The IRS has communicated that the single 2 from previous years equals the single 0 under the new W-4. Okay, if we jump through the next one. In this case, we're using the same 2019 example, $1,000 weekly, single 2 on the W-4, and on the 2020 side, the employee is still chosen single, skipped any of the choices in method 2 for multiple jobs, and then on dependents, $4,000 worth of dependents off of the dependent calculation yielded a dramatically different federal tax withholding. So roughly $4,000 a year less tax withheld. That all of these results, by the way, I'll mention it now, aren't necessarily right or wrong. They just are what they are, and it depends what the employee's goal is as to whether they're correct or not. So there can be factors like other things that are going on in that person's life or decisions they've made that'll decide what they want the end result to be. Some people like getting a refund. Some people like owing money. But the point is to focus on what the parameters do and how to get a result that's expected as opposed to one that's a surprise. Okay, so the next example we're going to look at is, again, $1,000 weekly, married to in 2019. So some different parameters there. And in this case, skipped method 2, and actually all the rest of it, just with the $4,000 worth of dependents, and the net result is no federal tax would be coming out, nothing. That's not a mistake, that's what it calculates to. So that would yield $3,400 roughly less tax withheld. A dramatic difference that you would maybe not assume if you just had copied over, oh, before I was married, 2 exemptions, now I'm going to put married, 2 dependents, I should be okay. And that's not necessarily the case. Okay, the last option it really comes in a couple parts, and this is a similar configuration. $2,000 weekly claiming married in 2019, married and nothing configured for the 2020 W-4, and you can see the difference again, dramatic, $2,700 less tax withheld. And you jump to the next slide, similar configuration. This time though, in step 2, 2C, the checkbox was selected for 2 similar jobs, and the federal withholding tax was $308, so $4,221 more tax would be withheld. So the net change from the previous slide to this one, similar configuration, is over $7,000 a year. So to anyone, that's a dramatic change. So the point is, in the running through of these examples, some relatively minor looking changes have major impacts. We have some of the sort of summary points listed. The devil's in the details, and going through the process and the instructions is important. The good news is that this is a per payroll process once you make W-4 selections. So you have opportunities to make changes to sort of zero in as an employee on what you want your end of year goal to be. So we would expect people to make choices filling out a W-4 in 2020 and then review it and make adjustments to it to hit whatever their personal goal is. So we've got some of that on the responsibility slide here. Is ultimately the responsibility for what happens is the employees, and we at Primepoint, as well as their employer, can provide assistance in helping them understand and what this is. But ultimately, the only specific guidance that can be given to help someone achieve a specific goal has to come from either their accountant or tax advisor. Another suggestion in the short term that we would put out there, if people aren't seeing their tax advisor until March or April, they can compare what's being withheld from their check to what was being withheld from their check last year, and sort of come close until they figure out exactly what they need to do. But again, as I mentioned earlier, we're staying away from terminology like right and wrong, as opposed to configuring the W-4 and their tax withholding to hit their personal goal. I think that's about it for me, and Vic, I believe, is going to handle the frequently asked questions.
Yep. So I'm going to move on to the frequently asked questions to wrap today's webinar up. And just I'll probably make this point a couple more times before we finish, but as you can see, that there's a lot of detail here, and there's a lot of information, and we will be. This has been recorded. It's going to be posted on our website, And for those of you that attended today's webinar, you'll hopefully get an email by the end of the day today or Monday with the slides that we just went through attached, so you can look at them closely, print them out, and review that data again. So the big question is who needs to fill out this form? And I guess the good news is it's only employees hired after 1/1/2020 and later, and those that are making changes to their tax status need to use this new form. Employees that were hired prior to 1/1, they don't need to fill out the new W-4. They can stay with the W-4 that they have now and keep their situation consistent. Employers can't require employees to fill out the new form, but it is optional for the employee if they, in fact, want to go through that process to see if it comes up with a better result for them on a paycheck-to-paycheck basis. So what if an employee is hired and does not submit the new form? Well, not a lot is changed there. If they don't submit a W-4, you will set them up as a single filer with no other adjustments. And when it comes to new employees with the new W-4, this actually may happen more often than you think, because as you can see, there's a lot of decision making that goes into completing this form. And employees may have to consult and probably will if they have a more complicated situation, and consult with their tax advisor. So they may not be able to turn it around same day and give it back to you. So you need to get that new employee paid, so you're going to set them up as a single filer with no other adjustments, and then adjust accordingly when they submit that new W-4. The next question is, and I think it's on the next slide. Did I move? No, didn't go, did it? There we go. What if an employee submits the old W-4? Well, obviously, you can ask them to submit the new one, but again, if they're submitting an old one, it's almost as if they haven't submitted anything if they're a new hire. So you would set them up again as a single without any adjustments. So the next question is, what should an employee take into consideration when filling out the new W-4? And we just go to the IRS's recommendations, and they're recommending that an employee use their previous year's tax return, as well as their recent pay stubs to gather the information that they need. And of course, as we've said a number of times throughout this presentation, it would be a good idea if they have a more complex situation to be consulting their tax advisor. So the new W-4 utilizes taxable wages. What do we mean by taxable wages? Well, probably for most of you it's pretty obvious, but for some of you that may not be necessarily involved in payroll all the time, taxable wages are gross wages that are impacted by qualified adjustments such as 401k and other pre-tax deductions and fringe benefits. And then the last frequently asked question we have up here is, are there resources online to help employees? And the simple answer is yes. And that's because beginning January 1, 2020, the paycheck calculators and the W-4 assistant form on Primepoint's website will be adjusted to accommodate the new W-4. And we will add to the employee experience a link that will take employees directly to those calculators. So those things should make it a little easier for them to compare what they had in 2019 to what they might have in 2020, and do some various different analysis there. And then the other option for them is the IRS's website, and you can see the URL there that will take an employee to the IRS's calculator, and that right now, as Chris pointed out earlier, is not ready yet for the new 2020 tax tables, but the IRS website does say that they're going to update it in January. When it comes to questions, you can get more information on the Primepoint website, primepoint.com/2020-W-4. That webpage has been up for a few months, and we keep updating it as we learn more information And we'll probably be taking another look at that page later on today just to see if there's any further updates. And that's eventually where the recording of this webinar will end up, is on that web page, and we'll be sending out a link to that as well. So with that said, I'm going to be closing the webinar, and I would like to thank everyone for attending. I want to wish everyone a great rest of their day and a great holiday season. And with that, we'll bring this whole webinar to a close. Thanks for attending.